I can tell you, if they did it today, it would, and they did it on a one-to-one basis, that it would be north of $40,000. By the time they do it, and I know this sounds outrageous to people because they get blinded by the numbers, right? But if you went back to 1913 when somebody had a $20 1 ounce gold coin and said, one of these days that's going to be trading at $2,600 or $2,700, that person would have seemed outrageous at that time too.
Special coverage of the Vancouver Resource Investment Conference is brought to you by First Majestic Silver, listed on the TSX and the NYSE under the ticker AG. Hello and welcome back to Soar Financial, here from the floor of the Vancouver Resource Investment Conference. We're in downtown Vancouver. My name is Kai Hoffman. I'm the EdJR mining guy over on X, and I'm joined by Lynette Zang of Zang Enterprises. Lynette, it's great to see you in person again. How are you? Happy New Year.
Oh, thank you. Happy New Year to you, too. I'm so happy to be here with you. Such a good friend. And we've been doing this for years now.
I was going to say, it's turning into a tradition.
It is. Absolutely. What a good tradition.
Absolutely. I love it as well. It's always great to chat in person.
Mm-hmm.
Like last time we chatted in person was at your house in May, I think. April or May last year.
Yeah, right when the bees were going, who is that person coming?
Yeah, I was. Next time I should send them a memo or something that I'm coming.
We'll let them know.
Exactly. No, it was fantastic. Really appreciated that. It's good to see it. Like, how was the start to the year? How are things?
Oh, wow. What an interesting start to the year. First of all, it's our anniversary. Just in a few days, on February 1st, Zang Enterprises was born. Of course, I've been doing this on some level since I was 4 years old, and I'm 70, so it was 66 years on some level. But yeah, very exciting times. The offices everything is looking really interesting.
Yeah, it's like it is tumultuous out there. I wouldn't say it's volatile, but there's so much going on. Like, I have a hard time even putting sometimes like fingers on topics because we could chat for hours. Like there's so much going on. Like, today is a big day in the U.S. We're recording this on January 20th. The new president is inaugurated in the White House.
Yep.
We don't know what's happening just yet. I haven't followed the news at all today, so I haven't seen if he signed any executive orders yet. And like, the market is all over. The predictions are all over the place as well. But that's just one thing that's happening.
Well, right? It is, and it's going to be quite interesting to see how this unfolds, though I have some opinions on what we're going to see this year, too.
Yeah. No, maybe let's start there, because it's happening today, so we got to talk about expectations, especially from a gold investor, silver investor perspective as well. A lot of investors are, like market commentators, are also calling for a lot of executive orders being executed in the next 48 hours. No idea what that would look like, depending on who you talk to. More bullish, more bearish. Like, what are your expectations for the next 48 hours and maybe for the next 100 days here?
Well, I'll go a little bit further than that, but I think that we're going to see a lot more inflation this year and a lot faster. So I think that there is a level of hopium that's out there right now that President Trump can fix things. And nobody can fix things because we're at the end of the currency's life cycle. There is officially no purchasing power left in the currency. The only thing holding it together is the confidence of the public. So if something happens and that hopium is destroyed, then I think we're headed into that hyperinflation will become apparent to everybody, because I'm certain it's already started.
Like, we've seen upticking inflation numbers the last 3 months here, actually. Like, I'm not sure how much of a big trend it is or trend change. I'm just looking at the stats and the graphs, and they're ticking up. Is that the beginning of something, or am I interpreting maybe too much into it?
I don't think you're interpreting too much into it. I think people aren't interpreting enough into it. And it isn't just in the U.S. This is a global phenomenon. And the problem is that central banks want to lower the rates. So with the inflation ticking up, it's hard for them to justify that because there's only one way to fight inflation, and that's with deflation. And the way they do that is by raising the interest rates and having fewer people borrow and raising the rates and having fewer people borrow and spend, which is deflationary in a consumer-driven economy. And what they want to do is lower those rates so that they're generating more inflation. And the problem is there's so much cash that's still floating out there from all of the trillions and trillions and trillions of dollars worth of debt that has been created since 2008. It isn't that they created and that money evaporates. It goes into these fiat money or government-based money, intangible assets. And that is very, very good for physical gold and physical silver, because it means that its value, even if they suppress the spot price, which is a contract price, right? It means that that is going up in terms of dollars or wherever you are, euros, it doesn't matter.
Yeah, we're seeing that liquidity in the meme coins right now. It's like, don't tell me there's not enough money out there right now.
Exactly.
Like, if you see newly created coins trading at billion-dollar valuations, like, give me a break. I have a hard time with it.
Yep.
The Fed is stuck. Like I think right now.
100%.
You mentioned it, deflation versus inflation is a really, really big topic. I don't like we get a Fed meeting early next week, I think, as well. I don't expect anything to come out of it. The question is though, like what I look at, like the gold price is holding up really well, because in my opinion, the Fed should actually raise rates, like based on what we're seeing, right? And gold is holding up really well. The dollar is fairly strong still. It's trading at around at 108 on the Dixie. That's what I look at personally. The purchasing power is gone, but a lot of people are buying dollars right now.
So it's the best horse in the glue factory, right? The fact of the matter is they're all in the glue factory. Everything has a life cycle. And we are at the end of this current experiment, which is why you're talking about the meme stocks, you're talking about the cryptocurrencies, all of these things people are rushing to position into, but those are all intangibles. And so while there is a lot of liquidity out there, I mean, what the central banks want to do is ease into an already easy economy, and there's your hyperinflation, right? And when that picks up, the public loses confidence and Bob's
your uncle.
Exactly.
Right. I had Andy Schechtman sitting in your chair at 9 a.m. this morning, and we were talking about the revaluation of gold.
Yes.
I'm curious what your thoughts are on that topic.
Well, look, it's really easy to determine what the true fundamental value of gold is. I am not expecting Wall Street to tell me that revaluation, it will happen 100%. I'm not even a teeny weeny bit doubtful of what that future is. What I don't know is what that would be in terms of dollars, let's say, by the time they do that revaluation. But that revaluation will be because the government is attempting to get that confidence back. So that means that inflation has really risen very visibly higher, maybe even to 50 or 100% or wherever it's going to be at that time. And so they'll lop off a whole bunch of zeros. And I can tell you, if they did it today, it would, and they did it on a one-to-one basis, that it would be north of $40,000. By the time they do it, and I know this sounds outrageous to people because they get blinded by the numbers, right? But if you went back to 1913 when somebody had a $20 1 ounce gold coin and said, one of these days that's going to be trading at $2,600 or $2,700, that person would have seemed outrageous at that time too. So it could be 3 trillion, it could be 100 trillion. I personally have a $10 trillion Zimbabwe note, so I am a trillionaire in Zimbabwe, but what does it mean? It means nothing. So if they did the overnight revaluation today on a 1-for-1 debt for gold ratio, then it would be north of 40,000.
I think Andy Schechtman mentioned 142.
You know what?
Like 1,000.
Why not?
Yeah.
Right? But the way that I get it is, since the gold is money, it's sound money. The dollars are based on any fiat currency right today is based on debt. So you just take however much debt they're admitting to. Now, where Andy is going could also be all the derivatives, so all of those bets on the debt. So this, when I'm talking about above 40, I'm not considering that. I'm just taking all the debt that they've admitted to and dividing it by every bit of gold that exists. In the ground, above ground, doesn't matter, right? So, yeah, we have some interesting times ahead. But let me tell you, if it gets to 42,000, 140,000, 30 trillion, whatever that number is, at that point, everybody will be quite clear that that government debt-based money has absolutely zero value.
Well, the consequences are massive as well. Like we talked about
course.
hyperinflation with Andy before. It's like if you do like revalue to 40,000, 142, it doesn't really matter. Hyperinflation is the consequence. So what's the
Exactly.
point? Like what's the end game? Like doesn't really matter what we're looking at here. It's like how do we get out of this? The Austrian Economics School says like okay, just rip the Band-Aid off, let it fail, and we'll restart.
Well, but even this system is trying to make that invisible transition into the new surveillance-based currency. I am not okay with that. The battle for me has been, and really, I mean, community has always been part of my mantra. We've talked about this a lot. But over the last year and a half or so, community, both locally and especially globally, has risen to really tippy top in importance for me. Because if we just sit back and do nothing about it, then you're going to get what you're going to get, and you have to accept it, and it's your fault, right? And I can't sit here and tell you, Kai, that I absolutely know that we can, have a difference in the new monetary system, but I'm going to try, and I'm going to do that by building a global community. That's one of the reasons I'm so excited to come to your event in November.
Oh, we're really looking forward to that.
Me too.
That'll be amazing.
Me too. But if we can come together on a global basis and just get 3%, a teeny weeny 3% of the global population to convert their government inflation-based currencies into physical gold and silver, that's everything, right? We might have a shot at having a seat on the table when they're really going into the new currency. And in that case, what I want is I want the public to take their power back. And the way that you do that is by having not just a backed currency, but a currency that is convertible into the gold. So that if you don't like what the central banks or governments are doing, you just convert that fiat money digitally or whatever, however they have it, into physical gold and create restrictions. Because that's what gold and silver do. They force you to be fiscally responsible.
No, Poland is doing that, exactly that. So Poland is buying about up to 20% of their assets in gold now. They're converting that. And they've been the biggest central bank buyer over the last 2 years almost, and really adding to the reserves to protect themselves also from CBDCs and potential impacts. Like, they're not against CBDCs, and you touched on CBDCs earlier, trackable money.
Right.
But they want to protect themselves, being it electromagnetic fields, pulses, whatever it is. All right. So they're preparing, like exactly what you're saying.
And so if governments can do that, and we're seeing that really, the global central banks have bought more gold now, and we don't have the final numbers for 24 yet, but even going through the third quarter of last year, they've bought more gold than they ever have historically, going back to when they started tracking it, because that's how you maintain your independence and your own personal sovereignty. And why don't we as individuals take a page from the central bank books? Because who knows more about what they're doing to the fiat money than they do?
Exactly. And they're in the inner circle, right?
Exactly.
They should know. Looking at 2025, looking ahead for the next 12 months here, like what are you most concerned about? What are you looking most forward to, actually, Lynette?
Okay, what I'm most concerned about is this massive debt wall, both government debt as well as corporate debt, as well as individual debt that is coming due. And if you can't pay it, then you roll it over, and the interest rates, because this is really why the central banks want to lower the interest rates, is because of this massive wall of debt. In the U.S., the level of new debt that they're having to issue is huge, right? I mean, it doesn't even dip down a little bit in what they're anticipating is going to happen. But that's why Fed Chair Powell wants to drop the rates. But we've been compounding interest forever. right? So that means that we're not paying any of the principal, and the interest that we haven't paid back goes into that principal, and now we're paying interest on interest on interest. So my key concern is particularly with treasury bonds, or 10-year notes really, which is the foundation of the global system. And we don't have anybody supporting that, because there is a run on the dollar that is happening right now, very similar to what we saw in the 1960s when foreign governments were sending in their dollars and pulling the gold out of our system. So much so that it forced President Nixon to, they say, close that gold window, which doesn't sound so bad, but it really forced him to hand over, or what he did, I don't know that it forced him to hand it over, but he gave full control of inflation to these private central banks, which to me is insanity, because that's just about debt and interest, and here we are today with officially virtually no purchasing power left. So that's what has me the most concerned.
We just mixed three topics in one here. We talked debt wall, we talked the bond market, and then we talked about, just like gold or dollars, the US dollar, right? Let's stay on the debt market for
Okay.
a second.
Mm-hmm.
Like looking at the Dixie, for example, and we mentioned it, like the dollar is fairly strong, meaning U.S. economy is like based on the numbers. Like, I'm just going off the numbers here.
Right.
Hate me for it in the comments, please. But it seems like it's going okay. Like, how worried are you about being able to refinance in 2025? Like, as you said, there's a big wall, but it seems like things are hinting like, or at least the new president is conveying a certain confidence to the market. Like, I'm just portraying what I'm seeing here.
Yes,
right?
and this is part of the problem, because with the economy seeming so strong, it makes it a whole lot harder for the Federal Reserve to drop those interest rates. And there's a lot of hopium. I mean, there's always a lot of hopium around a new presidency, right? And President Trump makes a lot of very bold statements, but not everything is completely up to him. So we're going to have to see how this moves forward, but that is the problem. And that is creating a lot of liquidity issues in that treasury market, and which is the foundation of the global financial system.
And yields are going up. So
Exactly.
like, brings me a bit to the bond vigilantes. Like,
Yes.
maybe we can even define the term, because I've seen a comment below one of the videos. Like, what is a bond vigilante? But the 10-year, you brought the 10-year bonds up.
Yes.
Like 4.63 is the yield right now. So it's been ticking up, somewhat stable right now, stabilized a bit. But how do you see the bond yields developing, and who are the bond vigilantes?
Well, it's Wall Street that are the bond vigilantes, right? And really, since 2008, the global central banks started using what they call forward guidance to let the banking system know what they were going to do so that they could get into a position to benefit. But then, oh my gosh, I think it was June of 2023, and when I saw them do this, I was shocked when they kept promising that they were just going to raise the rates 50 basis points, and then they surprised the markets and they increased interest rates 75 basis points, which may not seem like that big of a deal, but that started the bond vigilantes coming out again, because what it told the markets is that they could no longer trust what the central banks were saying, that the central bankers were going to do whatever they wanted to do and whatever they thought was the best thing for them to do. But the problem with that is that the markets are now disagreeing with the central banks. So much as they're trying to push the interest rates down, the bond vigilantes, the market bond traders, are pushing those interest rates up. And it was just really recently that we had the 20-year bond go above 5%. And so I anticipate seeing the 10-year bond, which is really the key bond in the world, go 5% higher than that, because the bond vigilantes are demanding to be paid more for the risk that they are taking, and that's a huge problem when you need to take on debt, because that means that you have to pay much more, create much more money to just sort of barely service that debt. at a time when you see both Japan and China that are not the big buyers that they once were, and in fact can be liquidating their bonds into this market, and especially China. We know what's going on with the BRICS, right? So I see a battle royale between global central banks, between the markets and the central banks, and now we have a new president in the U.S. that's pretty vocal about and pretty dramatic on the things that he might attempt to do or might be able to do on his own or get backing for. So
that yen carry trade is getting a lot more attractive. Like the U.S. dollar yen, is about 155 last I checked. Might have been off a couple points here, but everybody's nervous about the Japanese central bank raising interest rates above zero, or more towards 1%. So there's a gap that people are still exploiting here, but they're very, very nervous about it. We've seen that in August. I think we might have chatted about that. We've seen that in early August. It was a rush of liquidity trying to get out of the door. It was that yen carry trade unraveling a little bit, trying to get that easy money or securing the easy money. Is that something you're fearing then as well? Like how pivotal are the emerging markets? How pivotal is Japan here?
Well, everything is pivotal because they're all interconnected. So that was really the problem when the yen carry trade began to unravel, and then they had to back off. And that's what I'm talking about with the battle between Wall Street and the central banks. Who is stronger? I can't tell you, but Wall Street has all of those derivatives on top of all of that debt, which is probably what Andy was talking about with 140, could even be higher than that. So yeah, it's a huge problem at the same time that Japan is selling off U.S. treasuries and not as big a buyer as it once was. So who's going to support all of this new bond issuance? What? And at the same time that the Federal Reserve itself is attempting to lower their balance sheet because they've been the huge buyers of all of this government debt. Do you see the problem? Anything could happen, honestly. And that's why you need physical gold and physical silver in your possession, because it's the safest thing that you can do. It's above all governments. It's above all central banks, simply because it is used in every single sector of the global market. So it's not rocket science. No. You have the broadest base of buyer. It's a lot of protection.
Lynette, you just walked over from the main stage here, and you gave a workshop somewhere in this corner of the room.
Yes,
and,
I did.
The title of your presentation was Seeing the Hidden Shift. What's hidden? Like, it feels like we've been discussing a lot of it, but what are we missing, Lynette?
Well, what they do, and they know how to do this, meaning the central banks know how to make this transition from one monetary regime into the next monetary regime. And that is what is happening right now. And the way that they do that is by keeping things as normal as possible. And the way that they do that is by allowing the new whatever they're bringing in. So they're letting these cryptocurrencies run because it gets a lot of eyes and people have a fear of missing out. And so there's FOMO. So there's lots of participation, which makes it much easier to transition into a CBDC. But that's how they do it. Like, for example, back in 1913, you had a 1 ounce $20 gold coin. You had a $20 gold certificate, so you could go into the bank with the certificate and pull out the gold if you didn't like what the governments were doing. But you also had a $20 Federal Reserve note that had absolutely no backing and you couldn't convert. And they all were out in the market simultaneously, so people got used to that Federal Reserve note at the same level of purchasing power. So when they took the gold away and they took the gold certificates away, well, the bill still looked the same. And after all, they'd been using it for the past 20 years. So no big deal. And people didn't understand that they just lost their power because they had nothing that could hold politicians or central banks toes to the fire. Then in the early 60s, you had President Johnson that took the silver out of the monetary system in the US. So you had all these new coins that looked like the old coins, but they were made of copper and then just plated in the silver, so they still looked the same. And they were in circulation with all of the silver coins at the same time. And incredibly, even President Johnson, a sitting president, to say, look, if you try and hoard this silver, we're gonna crash the market. Incredible that nobody went, wait a minute, what? That's insane. But in his speech, he said they're all going to run at the same time and they all have the same purchasing power value. And so ultimately what happened, how often do you come across a silver coin in circulation anymore? You don't. And it doesn't even have the copper in the middle anymore. It's just garbage base metal that has no value. But when you look at all of the coins next to each other, kind of seems the same. So nobody really realized that we were being robbed, and our work and our wealth in both of those cases were being absolutely confiscated. So today, and they've been working on getting rid of cash and moving in this direction. This is a slow process. It is not an overnight process until it is, because they don't want you to understand what's happening. But, we got the first credit card in the U.S. without any backing of it in the 50s. So they've really, and in the 20s is when we started with a consumer-driven economy. So they've really been pushing us in this direction. So what do we have now? What I'm not really seeing yet are cryptocurrencies that have a whole lot of functionality. I think it's fabulous to be able to carry a lot of wealth in your pocket on a little thumb drive, but I kind of need more than that. And the volatility that's in the system, but people aren't looking at that. Like I was talking to somebody earlier. He does hold physical gold and physical silver. That was great. But he's like, oh, and I bought this cryptocurrency and it went up and now I'm a multimillionaire in this cryptocurrency. But what can you convert it into? And a huge difference, too, is that it takes energy to pull gold and silver out of the ground. But then that energy is stored inside of those physical metals and then utilized in all the different sectors of the global economy. The cryptocurrencies use a lot of water and a lot of energy, but they use it up. It's only used in one place. However, people are blinded by those numbers, going back to what we were talking about. I'm a trillionaire in Zimbabwe. I have a $10 trillion Zimbabwe note. What can I buy with it? Not even 3 eggs. Yep. So people should not be blinded by numbers. They should really know what's the true value of anything that I'm going to do, right? And the Federal Reserve on the FRED, anybody can access it. FRED, purchasing power of the consumer dollar, and look on the bottom of that scale and it has a big fat 0. That's the true value. So if you can only convert into that, then that's the real trend. It's not the cryptocurrencies or the stock market or anything else or the meme stocks going up. It's to hide the fact that the purchasing power is virtually gone.
So Lynette, something we've seen like with the Bitcoin craze as well, a lot of the Bitcoiners have been converting their gains into gold.
Yes, absolutely.
Just to secure their wealth.
Mm-hmm.
Is that something you've witnessed obviously as well? It's an interesting trend. Why would they do that?
Well, a lot of people that aren't just speculating on cryptocurrencies, but moving in that direction are trying to find something that is outside of the government's control, outside of the central bank's control. And so it's a very similar kind of hedge. That's why you buy gold and silver, because you want to basically be outside of the government and the central bank's control, which is a very good place to be. So, imagine how much gold would have been purchased in the beginning, because Bitcoin came out in January of 2009, quantitative easing. So this massive free money printing started in March of 2009. But the reason why you're seeing that is because it's a similar hedge. But I'm not convinced yet that cryptocurrencies are actually outside of the ability of the government to shut it down. I mean, TikTok went away and it came right back. Isn't that interesting? We have to look at that a little bit more. But if it's online, then there's a lot of subjective things that can happen with it. But it's the same kind of process. Those people that are buying cryptocurrencies to be outside of the government and the central bank control are the same kind of thought that...
Can it coexist, Bitcoin and
yes,
gold?
100%. 100%. And, well, I don't know about Bitcoin and gold.
What I'm looking for... A
cryptocurrency. First of all, if it is Bitcoin or something that you can't actually convert into gold, then yeah, that's proper diversification if you want to be well diversified. If you're going to have your Bitcoin, make sure you have the gold to balance it out. But going into cryptocurrencies, I can never get behind one unless it is actually gold backed and convertible into the gold. So if I want to, I think it's great for transactions as long as if I want the gold that's in there, I can get it, then I'd be good with that. If I can't, then it's air.
No.
It's air.
Well, can it be? Is it even physically possible to do that? Because at some point, if you want to use it, like the transaction volume just gets way too big and you have to have way too much gold stored in the back. Like, is that even feasible if we were to talk about that? Like...
It is 100% feasible because honestly, it's just like the argument of why gold can't back a currency because there's not enough of it. No, it has value because there's a finite amount of it. So all that really happens is in terms of that currency, those numbers go up. So it's very feasible to have a truly gold-backed cryptocurrency and a truly gold-backed currency, period. Right? It's just in relation to the numbers, but it requires fiscal responsibility. You can't overcreate the cryptocurrency if it's actually backed by gold. And you, as the individual, as the public, have the right to say, hey, give me back my gold. I want it right now. If you can do that, they have to maintain fiscal responsibility. If you can't do that, then you got a Zimbabwe that had a gold-backed currency that they were magically, after about, 5-6 months, able to devalue the currency by 44%. It's pegged. It is not backed.
Interesting. I think we just summarized the last question I had. Like, sort of talked about inflation strategies. Like, it was one of the panels you've done with our good friend JP Cortez.
Yep.
As well. Like, is that sort of what we talked about? Like, sort of all-encompassing. Like, just buy gold, protect yourself.
Well, that is really everybody should have a sound money foundation. Everybody. And it doesn't matter where you are because gold and silver in any form is monetary at its base, but you really can't eat gold and silver. So you also need security in food, water, energy, security itself, barterability, wealth preservation, community, and shelter. And so you need to make sure, that's why local community has risen, because I've been working you were on my urban farm, the bees welcomed you, right? But you saw that I'm creating my own security in food and water and all of those areas. That's where I developed the mantra, was where I lived, because this is what you need to sustain a standard of living. And how much our food price has gone up. So imagine creating your own food source when COVID hit. I had no problem. So I didn't eat avocados for a while. But I had eggs, I had fish, I had vegetables, I had fruit, I had nuts. So you need to create that security. And desperate governments do desperate things, desperate people do desperate things. So security is also critically important. But all of those areas of the mantra are what you need to sustain a standard of living and protect yourself from inflation.
Fantastic. Lynette, I always tremendously enjoyed chatting with you. I really appreciate you stopping by our booth again. It's a tradition. It's a January tradition now. So I really appreciate it. Thank you so much for, joining us. Where can we find more of your work?
Well, LynetteZang.com. I'm very active on YouTube and Facebook, I believe, is at the Lynette Zang, and Instagram, and something else
You doing funny dances on Instagram?
I do it every. Yes, I actually did do
you
a
did?
funny dance on Instagram. Yeah, I do whatever they tell me to do. Some of this stuff, I'm like, really?
It's for the engagement, Lynette.
That's what I'm told. Okay. But I'm easy to find. And what we love to do is help people develop and then execute a sound money portfolio strategy. And it's done in layers. So wherever we are in this trend cycle, you are prepared to either protect yourself or take advantage of the opportunities. And we do sell gold and silver. People ask me that all the time.
I got a personal question for you that popped into
Yeah.
my head. When were you able to create your urban farm and actually provide for yourself the way you do right now? Like, that's an interesting one. It's like, because we all talk about this. Like, it all sounds great. You got to buy gold and do that. Not everybody has the means for it. Like, there are different ways to do it. It just popped into my head. I figured maybe as a closing question. Like, when were you able to do that?
When the system died in 2008, up until that point, I was actually getting ready to retire. And I was living in a little 2-bedroom condo that I could just lock the door and off I go. And then when 2008 hit, number one, there went my retirement plans, because this is really what I was born for. And I've studied currencies life cycle since 1987. But that's when I bought my piece of property. It's a half an acre. You were there, dead central Phoenix, and I was not a gardener or a farmer before that, but I knew that the biggest issue for most people was food. So it's been a work in progress since 2008, which is really why I said, Kai, you've got to have that community, that local community around you, because I don't think we have the time. Or, and I've been quite fortunate that I could ultimately afford it, where it was just me in the beginning. I'd get up at 4 o'clock in the morning and I'd go out and I'd weed and, learn how to lay irrigation and all of this stuff. Now I'm lucky enough to actually have experts in those areas, but there are ways to do it. I was just talking to a woman here, and she lives in Vancouver here, and she lives in an apartment in a high-rise. And she says, well, I can't do that. First of all, there is always a way to secure your food, whether it's with broccoli, sprouting broccoli seeds. You rinse it off for 3 days. You've got fresh food, and it's highly nutritious, dried foods. But I asked her, I said, well, there's got to be some community gardens up here. And she said, oh, there are. And in fact, I've been on the waiting list since COVID for the last 6 years. She says, I've got 2 more years to go and I'm going to get a plot. I said, well, okay, I can see that could be a challenge, but I'll bet you could volunteer, right? And she goes, well, yeah, they do appreciate volunteers. I said, go there, create your community. Put in some sweat equity. You might actually get your plot sooner, but aside from that, you're creating relationships. So there's always a way to do it, regardless of what your means. If you have nothing to work with, sterling silver. Our minimum at Zang Enterprise is $1 silver. So what, about $35 or something like that, right? This is not prohibitive, and it's a great place to start. Just do something and go create that community.
Fantastic. Awesome. Great closing note here. Really appreciate it, Lynette, and everybody else. Thank you so much for tuning in. I hope you enjoyed this conversation with Lynette Zang. Make sure to follow her. Great advice. Really sound advice as well. You should follow it, listen to it. Go follow her on Instagram. Watch her dance videos. And make sure to hit that like and subscribe button here as well. We do tremendously appreciate it. We'll be back with lots more here from the Vancouver Resource Investment Conference. Appreciate your time. Thank you so much. We'll be back with more. Bye.